Now, let's have a look at some business news for you. And the travel industry, of course, has been one of the worst hit sectors by coronavirus, as international trips have really ground to a halt. And that has led to one of Europe's biggest airlines, EasyJet, to report their first ever annual loss. Well, for all the detail, we're going to speak to our business editor, Stephen Carroll, who's joining us now. Stephen, first of all, then, just tell us exactly how bad EasyJet's been hit.
Pretty dire. I mean, it's an absolutely massive loss for the British low-cost airline, the equivalent of 1.4 billion euros lost over the year to the end of September, which of course includes a fairly significant period of time that was pre-coronavirus as well, which gives you an idea of how big the losses have been to wipe out the profits the company would have made in the first half of its financial year. To give you a comparison, that 1.4 billion euro loss for the year to the end of September in the previous year, EasyJet had made a profit of around 430 million euros. So a huge swing into the red, the first annual loss in the airline's 25-year history. And the signs for the future aren't great either. EasyJet is still only operating 20% of its flights in this last quarter of 2020. So no huge chance of things improving in the short term either. The company has raised funds from shareholders. It's gotten a major loan from the UK government of over 600 million pounds, around 680 million euros as well. It's cut 4,500 jobs because of this crisis. And although the CEO has been saying today that he does think there's pent-up demand for travel, he points to the vaccine news last week when they had a 50% jump in bookings when Pfizer announced its vaccine test results. Also, the travel restrictions, when they were lifted on the Canary Islands, the airline saw a huge jump in bookings there as well. So the CEO says there is big pent-up demand for travel out there, but the company still didn't issue short-term financial guidance, giving you an idea of how uncertain the future is for airlines out there at the moment.
Stephen, this next story has really surprised me. Another travel business, Airbnb, though, reporting a return to profit and saying they're going to launch on the stock market as well. How are they doing that?
Two pieces of surprising news. So Airbnb between July and September of this year turned a profit of $219 million. So a return to profit for the company. However, if you look at the company's financial position in the first 9 months of 2020, it gives you a better idea of how the pandemic has impacted Airbnb. Its losses for that first 9 months of the year, almost $700 million. That's more than double the losses the company had reported for the same period last year. Now, essentially, what allowed Airbnb to return to profit in those last 3 months was to do with both cost cutting the company had carried out. They cut 25% of their workforce earlier this year. They slashed their spending on advertising, but they also developed new markets from people, for example, looking for somewhere to work remotely, perhaps somewhere with more space. They had a surge in bookings for rural locations, for people who still wanted to get out of their own homes but couldn't travel very far. The company, though, did have to raise funding on an emergency basis earlier this year, $2 billion. It's still, though, with this turnaround, decided to press ahead with plans to launch on the stock market. It had been something planned for earlier this year, but pushed back because of the pandemic. It's now hoping to have its initial public offering of shares in December of this year, hoping to raise $3 billion with that IPO, valuing the company at, according to media reports, between $25 and $30 billion. And that would be a significant increase in the value of Airbnb compared to April, when it had to raise those emergency funds. The company valued at just $18 billion. So things turning around in the short term, but like all other companies in the travel sector, really until global travel can resume, which presumably will be when there's a vaccine, the company's future looking a little bit more uncertain, but it's nonetheless pressing ahead with this IPO.
And finally from you, Stephen, let's have a quick look then at the markets. How's it going?
European shares, a mixed start to the day today. Certainly that rally that we got on the news of Moderna's vaccine tests cooling in trading today. At the start of trading in Europe, London's FTSE 100 was in the red, pretty flat though across the board. London, Paris and Frankfurt. EasyJet shares down around 1/3 of 1% after their results. essentially investors are sort of, expended some of their optimism last week with Pfizer's results. So less of a surge we're seeing this time around, and that rotation trade continuing into stocks like travel stocks that have seen some prospect for recovery with a vaccine, and away from those stay-at-home shares as well. The situation, of course, remaining still very uncertain. It was a similar picture in trading in Asia earlier. Just some gains on the Nikkei in Tokyo, but falls across most of the rest of the Asian markets as well.
Stephen, thanks very much. Stephen Carroll, our business editor, joining us there. And we're staying, in fact, with money for this next story.